Hey there, Bookkeeping Side Hustle community. Glad to have y'all here on this wonderful summer day. We are here for our latest interview. We're going to be talking about, are we pricing our services correctly with an effective hourly rate? This is something that I've always kind of known in the back of my head. And then when our guest specifically said he had a lot of thoughts about this as well, I thought, okay, he's singing my song. So this idea of an effective hourly rate and pricing our services, and just there's always questions about that for new bookkeepers. So we want to get an expert here. So I'm joined today by Shahram Zarshenas of Financial Sense, which is a practice management application. And we'll get into that a little bit, but really this is about pricing. It's not going to be a demo. We will have a full demo of Financial Sense on August 2nd at 1 p.m., but you'll get plenty of info before that. Kind of until then, bookkeepingsidehustle.com/financial-sense, which you can see here. That's going to be kind of like our hub for all things related to Financial Sense. It'll also be where you can register to get your name in for, it's too late for today, but for the next demo too, he's giving away a free subscription to the practice management software. So be sure to sign up if you want your name in our famous prize wheel. We're going to do the prize drawing for this episode at the end of the show, so stay tuned. Hopefully we'll make one of you will make your day. And the last bit is feel free to subscribe, whether you're watching this right now or after the fact on a replay. Subscribe to the YouTube channel. It helps a lot, and you'll get notified of all of our great info. So we have Shahram here, and now I would just like for him to introduce himself.
Hey everyone, I'm Shahram. I'm the actual founder of Financial Sense. Really excited to talk to you all here today. I think this is an important topic. Really excited to talk to you about this topic specifically. You know, we have the chance to work with a lot of firms, and this is a struggle a lot of firms have, whether, you know, not only like, are they pricing them correctly, but where should it be priced? So really excited to share some of the insights we've learned over the years and see if we can add some value.
Perfect. Yeah. And I always like to have people, chime in where you're from. You can put questions in the comments too as you're watching this live. I will be able to see them, and we're going to have a Q&A session at the end. So please let us know where you're from. And also, if you were disappointed that I didn't ask Shahram to tell a joke, he's going to have to tell one at our next interview. I let him off the hook today. So I always like our guests to kind of give us the high level. A lot of us are busy. We got kids at home, or we've got jobs, and we're kind of doing this, building our businesses slowly or on the side or something. So if you had like top 2-3 tips that you want people to take away, if they only are listening to the first 5 minutes of this and then they got to go on with life, what would you want to share with us about properly pricing our services, knowing our effective hourly rate? Why is it important to calculate that number? Just sort of like a high level response before we dig deep for the rest of this session.
Yeah, I think, and we'll talk about this a little bit. I'll hit these key points at the end too, but definitely the thing is, you got to track your effective hourly rate, and to do that, you got to track time. A lot of firms think when they're on the fixed fee model, they don't need to track time anymore because they're not billing off of it. But you still do, because you got to understand where you're being productive, where you're efficient, how long it's taking, so you can see if that client is still profitable for you. Also, I would say you got to do it every month. Clients can be profitable at first, but they can slowly become unprofitable for your firm. And the reason it's so important is because you may think, as a solo, or, as you start to grow your team, you have enough to get by and pay yourself, but you need to make sure you have enough money to still reinvest back in your firm. If you want to build a big or a strong, consistent bookkeeping business, you need to be able to reinvest. And if you price correctly, you'll have enough money to do that organically through the cash flow of your business, instead of maybe using a credit card or taking on debt.
Right.
So it's really important, and it's really easy to overlook.
That's that scope creep problem, where you think you get excited. I always think my projects are like not very profitable at the beginning, but I'm kind of willing to eat it because I know that, like, okay, well, if I have this client for years and I'm not having to market anymore, then I'll get good and fast. But I guess what you're saying is that client tends to get a little fat maybe and asks for a few things. And so if I'm not careful, then I'm adding a new payroll per state every month, or whatever, as they're growing, which hopefully they will if I'm doing my job well, but I see how that's a problem. So, okay, great. Those are some, anything else high level before we dive into all that you want to share today?
No, I think I'm really excited, honestly, in the next presentation, talk a little bit more about Financial Sense as a whole. It's a great tool if you guys are interested in using something to help run or streamline your firm. Check us up at financial-sense.com. If you're interested, our team will talk to you, listen to your problems, see if we're a good solution for you too.
Exactly, and y'all can easily get there too. If you can't remember that, what he just said, there'll be a URL in the description of this video to take you directly to Financial Sense. Great that we got a lot of people here. I'm interested, while we're getting his presentation on, tell us if you've had that painful scope creep where you thought someone was profitable and then they turned out not to be. But glad to have you here, Nancy, Leanne, Debbie, and everyone else that's watching. So shall we share your screen?
Yeah, let's get into it.
All right, I'm going to add this. I'm going to take off the image here, and all right. Well, and I know you put this together. I'll jump in. I'll be monitoring the comments as well, but take us through what you want to make sure we know.
Perfect. So you can see my screen. You can see the presentation?
I can, yep.
All right. So really excited to jump into this topic with everyone. Again, we're going to be talking about, are you pricing your services correctly? And in this, there's many different ways to price your services, but today we're really going to focus on one of the more popular models, and I think the up and coming model, which is the fixed fee model. So charging a fixed amount. A little bit about me. So why I think I have some knowledge and can share some insights that would hopefully add value to your firm. So as we mentioned, I'm the founder of Financial Sense, and our solution just really helps bookkeeping firms scale and grow. But before we ever wrote a single line of code and started building our product, we spent a full year interviewing accounting firms and bookkeeping firms. We talked to over 100 firms. We really just spent day to day learning what their process was like. What are the problems they face? What are they trying to do right now to solve those problems? So through that experience, we really got to understand the life of an accountant, but their biggest struggles. And we not only did we do that so we could build a great product from that knowledge, but also we really wanted to understand the person that we're truly trying to serve. So through that, one of the big problems was pricing. And I'm going to share a lot of those insights with you today, and hopefully it can add value to your firm. But due to that, we're the new kid on the block. So we've only been around for about 1.5 years since our product has actually gone to market. But we've grown incredibly fast. Given the time it took to really understand the firms, we've already served over 400 firms. We're adding, I think, about 30 new firms a month, 30 to 40 new firms a month. So it's been a real good blessing. But let's jump in.
Yeah.
So what are we going to talk about today? So first, I want to talk about what is fixed fee billing. For people that may still be on the hourly model, talk about just what it is. Then we're going to talk about the benefits. So the fixed fee model is a great model. A lot of firms love it, and there's a lot of good reasons why, because there's a lot of benefits. We're going to talk about those a little bit. And then I want to talk about the risk. So the risk is really just, it's easy to underprice your services and not even realize it. So we're going to talk about that in depth. And we're going to talk about how you can mitigate that risk and overcome it. And then how Financial Sense can actually help you save time and automate this process.
All right. Yeah. Who's doing fixed fee? Who's doing hourly billing? Those of you who are listening, and who's not even, and it's okay if you're not sure what either the difference is. And there's plenty, I know I wouldn't have known what the difference was when I first started and why it was important. So feel free to chime in on that question while he gets us going here.
Perfect. So let's talk about what fixed fee billing is.
Yeah.
So fixed fee billing, typically you agree on a fixed rate that a client's going to pay you regardless of the amount of time you spend on the work. So a client comes to you, they want you to do their bookkeeping. You say, I'm going to charge you $500 a month flat every single month. It's a fixed price. It doesn't matter if you spend 5 hours, 10 hours, or 2 hours on the work. You're still getting paid $500 every month. It's that fixed price. Also, typically with fixed fee, because you're estimating, you're estimating before you actually do the work. You don't have the time to get in and actually do the work before you can really estimate it. So it's an estimation. You're kind of guessing, how long is this going to take? And there's ways to look at that, right? We'll talk about that a little bit more. Also, with fixed fee billing, it's typically common that people offer packages, right? So you might have a small business package, a medium, and a large. Having packages is great. Typically, how you can bucket your packages, you see people, you look for variables in a business to measure this, how complex it's going to be, like the number of employees they have, number of transactions or bank accounts, and you can use that to categorize that business into a certain tier or package. Also, inside these tiers, you sometimes see people bundle their services together. So in the SMB tier, you might just have bookkeeping, but as they get bigger, you offer bookkeeping and payroll and tax, and you bundle it together. By bundling your services, your clients are more likely to sign up for those services together instead of selling them individually. So it can boost your billings. You also bill the client before the work is delivered. So in the fixed fee model, you're making the same amount every month. Because you're making the same amount, you already know how much you're going to bill the client before the work is done. So you can bill them day one instead of waiting till after the work is performed. So on the hourly model, you actually have to perform the work before you can bill on it, because you have to know how long it takes. If it takes 10 hours, you're going to take your rate times 10 to get how much the client is going to owes you, is going to pay you. But on the billable, you don't have to do that, so you can charge up front, which is great. You get the money a little faster. Okay.
Your client also knows what to expect too, so that's a blessing for the client. They're not, well, okay, I'm gonna hire you, but I'm not sure how much you're gonna charge me. If with the fixed fee, they at least know, and that minimizes their risk.
Yeah, it does. It gives a lot of transparency to the client, which they really appreciate. And we'll actually talk about that a little bit in the benefits. So we've talked about what fixed fee billing is. So what are the major benefits? Why is it becoming so popular? Why are a lot of firms actually adopting this model? Well, one of the first reasons is because since you can bundle your services together more easily, you can increase your billings. We've typically seen firms that have adopted this model and bundled their services together have the ability to increase their billings anywhere from 20 to 30%. That's very powerful to get that much more money from your clients and to reinvest that back in the business. Consistent cash flow. So as we all know, cash flow is very important. If you run out of money, you can't really run your business anymore. So you got to make sure you don't run out of money. And by doing that, by having consistent cash flow, it becomes a lot easier. So given you know how much your client is paying you every month, $500, if you have 10 clients paying you $500 every month, every month you're getting in $5,000, right? So since you know how much you're going to be making every single month into the future, it's a lot easier to budget. It's a lot easier to know when you can afford to hire that new employee. If you can be more aggressive and make that decision and be more confident, you can know when you have enough money to invest in marketing, to go out and get more customers. So by having consistent cash flow, it makes your life easier. It helps you sleep better at night because you don't really have to worry as much about, will I have enough money next month to afford this expense? Getting paid in advance. So we talked about this a little bit. You can, since you know how much you're paying, getting paid every month, you can get paid a month in advance. Getting that money faster today is more valuable than getting it down the road. But here's the thing, a lot of firms, or some of the firms I've actually talked to, have had success not just getting it a month in advance, but a full year in advance. So think about this. Instead of waiting 12 months to slowly get $500 every month, you get $6,000 on day one. What can you do with that money? You can reinvest that now to acquire more customers that will then start paying you sooner than if you were to get the money over time. So getting that money in advance is a huge benefit. It can help you grow faster, self-fund your business instead of using debt or other vehicles. But it's in my opinion, this is one of the biggest benefits. I've felt this firsthand. So we're not an accounting firm, but we're a software company, and we basically charge a fixed fee. We charge our users a fixed amount every month to use the product. 70% of our users pay us a full year in advance, and we do this by offering a 30% discount. So if you pay us a full year in advance, we'll give you a 30% discount. Yes, we're not making as much money, essentially, but we're getting it faster. By getting it faster, we've been able to reinvest in marketing, been able to hire people to improve the product, provide a better service faster, which has resulted in more growth. So it's been a huge benefit for us. A tip is you can offer a discount, but I've also seen a lot of firms that don't even offer discounts still had success at getting a full year in advance. My accountant actually, he called us up in December and said, you're ending your year, you have some money left over. If you want, you can pay for my services a full year in advance. It doesn't show it makes your bottom line less. You don't have to pay taxes on it.
Yep.
So that he didn't even offer us a discount, and we still gave him a full year of billings in advance. So
right.
you'd be surprised.
I've had one client and he paid full for the year. I didn't offer a discount. I wasn't interested in offering a discount, but he was excited to pay. And he was the one that suggested it, actually, not me. But that's because I'm still learning all this, and I could see a good campaign kind of going out maybe at the end of the year, like especially if the clients that have we know the clients who have cash. Don't send it to the clients that don't have the cash. But that's he's not spinning fairy tales, y'all. It really does happen. So think about that in your toolkit for pricing.
Yeah, it honestly, it can't hurt to ask, to offer it as an option. You'd be surprised how many people will take you up on it.
Ooh, Trinity chimes in and she says, treat it like a trust account almost, because she says if the client does cancel, they might want a refund, and that could get hairy. So that's a good caution. She's someone I definitely listen to. She's been around the block with bookkeeping clients. So it's think about it, guys. But all he's doing right now is just kind of presenting some of the benefits to fixed fee pricing. I think we should be done with hourly pricing, y'all. So, but it's kind of interesting because we're doing this effective hourly rate presentation. So we do still need to know our effective hourly rate, which we're going to be taught. But that is a good point, Trinity, about making sure we don't maybe spend it all, or just have your contracts super clear. So anyway. I think you're on happy clients.
Yes, happy clients. So you talked about this a little bit earlier, the transparency. So your client knows how much you're going to be charging them every month. That makes them feel better. It helps build trust. And it's not just out the gate how much my service is going to cost, but they're not going to get surprises, right? So 1 month it may take twice as long to do the books. If it does, and you're on the hourly model, you might be billing your client twice as much that month. They're going to wonder what happened. They're going to have questions. It may cause a little bit of distrust. On the fixed fee model, they know exactly how much. The consistency, it helps build trust. They appreciate it. And also, like we talked about, how it helps you budget better, it helps them budget better because they know exactly how much they're going to have to spend every month with you. So clients do really appreciate the fixed fee model. And this one right here, this next one is probably the biggest benefit. You are rewarded for increased efficiencies. And you'll see this when we talk about the effective hourly rate, but the faster you can do the work, the more profitable that client becomes to you. So if you can find ways to become more efficient, to automate your process and spend less time doing it, you make a lot more money. So let's say you're trying to make an effective hourly rate around $100 an hour. You think it's going to take 5 hours to do the work. So you tell the client you're going to charge them $500 a month. If you can do that work, so you're making $100 an hour. If you can do that work in 2 hours, you're making $250 an hour, basically. Yep. Mm-hmm. So the faster you do it, the more profitable you become. And this is a big thing with Financial Sense. When we built it, we really saw this. So we said we want to really create a way for firms to streamline their process. So as you grow, your team always knows the best and most efficient way to do the work, but also to automate some of the time-consuming parts of your process, like client data collection, where you're spending a lot of your time. If you don't have to spend time doing it, all that manual work, then you can spend the time getting your work done faster and become more profitable. So we actually built a lot of stuff in Financial Sense to help you with this, which we'll cover in the demo that we'll be doing August 2nd. But it's really important. This is definitely one of the biggest takeaways is the faster you do the work, the more profitable you become on the fixed fee model. Mm-hmm. And lastly is you'll eliminate the painful and time-consuming accounts receivable process. No one likes chasing people down for money. So, I mean, when you're on the hourly model, you have to take your time, calculate how much you're going to bill the client, generate that invoice, send it to the client, track the progress, has it been paid, follow up on that if it hasn't been paid. It's pretty time-consuming. On the fixed fee model, you know how much you're billing your client every month. You can put it on autopilot. you could automatically draw it from their bank account if you want. It happens in the background. All you really have to do is make sure the charges go through. So it'll save you a lot of time on actually getting paid and collecting that money, and it really gets you paid faster.
Yep.
And I didn't talk about this. So one big benefit of this, like talking about the increased efficiencies on the hourly model, typically if you do the work twice as fast, you bill twice as less. So you make more money by doing the work faster, but on an hourly model, it's actually the opposite. So let's talk about the main risk, right? And that is, it's easy to underprice your services on the fixed fee model. So like we talked about, when a client comes to you, and you're going to quote their services, you're estimating before you actually do the work, right? You look at the business, you have ways to check how long may it take, like how many employees they have, transactions, or bank accounts, but it's a guess, right? So if you think it's going to take 5 hours and you want to make around $100 an hour, you say, I'm going to charge you $500 a month. But you could overlook some complexities. You don't really know till you get in. So maybe you thought it was going to take 5 hours, but then it takes 10 hours. That client becomes unprofitable for you, and your services become underpriced. This happens in two areas. Typically, when you first take on a new client, so like we talked about, you're estimating the services, you don't really know, you haven't actually done the books yet. Also, it happens over time, sometimes with existing clients. You could price your services right. That client's profitable for your firm. It's making you money. But over time, the business grows. They get more employees. They have more bank accounts. It becomes more complex. As their business becomes complex, it takes you and your team more time to do the work. So as that happens, that client can become unprofitable if your rates don't change and follow that trend. So you could be making $100 an hour, but 6 months later, maybe you're making $75 hourly. Maybe you're making $50 a year later. You need to be able to identify that. It's easy for a profitable client to become unprofitable as they grow.
I agree.
Yeah, a lot of people overlook it. You don't think about that, right? You're making money, you checked it, it's great, and then 12 months later, you start to wonder, why don't we have as much money on the table to reinvest back in the firm? And that can be a good reason why. So how do you overcome this risk, right? How do you identify the unprofitable clients and keep this from happening? First, you got to track time. Like we talked about, on the fixed fee model, you're not billing off time, so a lot of people don't track it anymore. But you still got to do it because it helps you understand where you're spending your time, which clients are taking up the most time, and if you're being efficient. And it's not just your team. If you're solo, yes, you got to track time, but if you have a team as an owner, you still got to track time too. Everyone's got to do it. And here's the thing. A lot of people struggle to track time because it's an extra task, right? You have to remember to go turn on the timer, do the work, remember to turn it off. It can be time consuming. It can be easy to forget. So that's one thing in Financial Sense. When we built it, we built in time tracking, right? So Financial Sense helps you track your client work. It helps you know what you need to do today. But as your team goes in to see what they have to do, they can easily just tick a little button and the timer will run in the background. When they complete it, they come back and mark the work completed. They stop the timer. So we actually built in very seamless time tracking to prevent it from becoming a chore itself, to make it easy to use so you can actually get that accurate data.
Yeah, I've gone through little fits and starts of trying to track time, and I use like a free app. And I think I'm one of those ones who's you're not going to do it because you love it. You're going to do it because, like, this message that you're presenting, we know whether someone uses Financial Sense or not. There's plenty of ways to track time. Your message today is like, this is really important if you want to have a thriving business, and so it's going to be a mental shift for us to really internalize what you're saying. And we're probably going to do bad, and you're probably going to have to go back and oh, I didn't track today, but next month they'll be better. And eventually it would become part of who you are, probably because you're going to see the benefits. You're going to be able to I can raise that price now because I got over my pain of and I tracked time for 4 months straight, and I made this good goal. I hadn't never done that before, and now I see clearly.
It becomes it's tough. You're right. It's hard to kind of get in the groove of it. But even if you're making some small mistakes here, it's better to have that data as that than nothing at all,
Right.
which is great. And you can always go back and manually log time.
Sure.
But it's so important. The best firms that I've talked to, the fastest growing firms, the most profitable firms I've ever worked with, they all track their time. It's such a key metric for them.
Well, and I think I've been in this world for about 3 years now, very slow, very small. And so I think I've seen this like fixed fee value pricing. It's like really like the mantra right now, to where like if you say the word hourly, you're kind of like, you know, you're a dinosaur. And you're like bringing the word back, but in a whole different way. It's not tracking, it's not billing hourly. And so there's going to be a lot of us who are like, maybe we've listened to one too many fixed fee pricing webinars, where now we're combining like the best of both, of still tracking that time, but forget the AR part. Like, you don't have to go bill on this, but you have the data. It's a decision making tool. It's like a KPI for an accounting firm, which we don't have a lot of those. So yeah, I really do understand what you're saying, and it seems like it's a necessary evil to be one of those really outstanding firms that you talk about. Especially, I mean, I would imagine you really do know, because you've talked to so many. Like, good ones are doing it, and you're like, okay, the good ones are doing it. I guess I'll have to do it.
Yeah, and like to the next point, like, what do you do with that time, right? Like we talked about, you use it to calculate your effective hourly rate. And I would say, like you talked about, like KPIs or metrics for firms. This is one of the most important ones. The effective hourly rate tells you how profitable that client is for your firm. And on an aggregate level, it tells you really how profitable your work is. So there's nothing more important to me than running a profitable business. I mean, at the end of the day, if you're not making enough money to pay yourself, but you may be making enough money to pay yourself, right? But if you're not making enough money to hire employees, to reinvest back in the firm, to build the bookkeeping business you want to build, whether it's just, you want to be a solo, you want to make a profitable living, you want to build a big bookkeeping business with a team, you need to have enough money to be able to reinvest back in the business. And taking that time to calculate your effective hourly rate is going to really help you do that. Because otherwise you're shooting blindly into the dark.
Right.
And so how do you calculate the effective hourly rate, right? So you take that monthly fee. So if you're charging, let's say, $1,000 a month, and you estimate it's going to take 10 hours, you're basically making, even though you're charging a fee, it's telling you if you were billing hourly, you'd be making $100 an hour, right? So this tells you how profitable it is. Now, let's say you're charging $1,000 a month, but it takes 20 hours for some reason. You underestimated how long it would take. You're still getting paid the same, but you're only making $50 an hour. That client is much less profitable than you thought they would be. So that's when you need to look at the situation and see, do we need to renegotiate these rates? So what are the best practices, right? Now that we know you got to track time, use it to calculate your effective hourly rate, which tells you how profitable that client is for your firm. What are some best practices around it, right? So first, you need to set a goal rate. As a firm, you really need to decide how much you need to make to pay yourself and to accomplish your vision, whether it's, you're a solo, you want to be able to have a profitable business, or you want to build a team. So how much you need to really think about that. If I want to have a team of 5, or I want to invest this much money into marketing, or whatever it is, you need to really identify how much do I need to make to do that. You use that by setting your goal rate. From what we see in our experience, new firms starting out can typically, you want to be around that $70 an hour rate, effective hourly rate wise. As over time, you gain experience, you can charge up to $150 an hour. I've seen some firms charge a lot more, right? So 70 to 150 is definitely the range we typically tell firms to aim. And we see a lot of firms that are half that. We see a lot of firms in, effective hourly rate of $30 an hour, which they can get by with, but they could be doing a lot better, whether it's pay themselves more, have more money to reinvest back in their firm. So setting a goal rate is key. Then once you know your goal rate, you need to calculate your effective hourly rate in the first month for every new client. So like we talked about, the times this happens is typically when you take on a new client. Before, you don't do the work up front, so you don't know how long it's going to take. You estimate it. That opens the room for risk. So by calculating this in the first month, you can quickly identify, did I price this client correctly when I took them on? And also, it helps with having more success at renegotiating your fees. The earlier you can catch an underpriced client and renegotiate those fees, the better. If you wait 6 months, it's not as believable when you're coming. I've been doing this on profit for 6 months and just found out. So you have a higher success if you can catch it faster.
I like that point. That's good.
So next, we talked about how clients can be profitable, right, at first, but over time, their business grows. It takes you more work to agree what you said you would do, so they become unprofitable. So you need to not only track it in the first month, you need to track it every single month for every single client, because that will help you see the trends, right? You'll be able to see, I'm making about $100 an hour, but 6 months later, you're maybe making $75 an hour. A year later, you might be making $50 an hour. So you need to be able to identify that trend to make sure clients that are profitable now don't become unprofitable over time.
Well, and I know this isn't a financial sense demo, but I'm just like dying to like imagine, like, so y'all make it super easy, like, to show me that trend.
Yeah. So I'll have a screenshot. I'll show you that. So
okay.
But yeah, we try to make it as easy as possible.
Awesome.
So a bonus tip, something I've seen a lot of firms do, like, let's say you identify an unprofitable client, right? You need to renegotiate those rates. That's a tough conversation. No one likes doing that. No one likes having that conversation with the client. It's scary. Well, something that can help you with that is include a clause in your engagement letter that allows you to adjust your fees for underquoted work. By having an engagement letter, it's making it known. It makes it a lot easier to have that conversation with the client. It's not as big as a surprise, right? You don't want to surprise your client. But I like to say, take it a step further. Don't just put it in the engagement letter. Have a conversation about it before you take them on. Say, this is very unlikely, but it does happen. I want to let you know we have this clause. Like, if we were to underquote your work, like, we have the ability to adjust your fees. They will appreciate that transparency. It will build trust, and it will prevent it from surprising your client if you ever do find yourself in this situation.
Yeah, for sure.
So what are the key points, right? So basically, the first point is fixing model is great. There's a lot of amazing benefits to it. I highly recommend it to everyone. But you got to be careful because you can easily underprice your services. Again, before you actually quote the work, you're not doing the work before you actually quote it. So you're estimating. You got to be able to track if you estimated it correctly. Is it taking as long as you think it would? Is it taking 5 hours or 10 hours? Tracking your effective hourly rate will help you identify unprofitable clients. Again, this is a core metric. All the firms I've worked with that have been really successful track this every single month. They use it to really run their firm. Because at the end of the day, if you're not making enough money on a client, you don't have enough money to reinvest back in your business to take it to the next level. And you need to track it every single month. As we talked about, you can track a client correctly out the gate, but over time, that client can become unprofitable because their business becomes more complex and it takes you more time. So you got to be consistently tracking your client.
Is this I guess if I had tried to write this presentation, are you seeing this a lot? Like, you've made this point like several times. Do you find people get like really excited about the tracking time and using I'm guessing y'all can kind of see how users are using your product too.
Yeah.
And then they fizzle out. I mean, is this like something that we all need to kind of be helping each other hold accountable to? Like, guys, like, don't just do it for 3 months. Like, you got to go 3 years. You got to go a decade. Like, is it easy to fizzle out? Like,
I think it is. I think it's easy to, when you take on a new client, to look and see, okay, let's look at how long it took this month. Did we price them correctly, right? And say, okay, we got it right. It's good. No reason to continue tracking time. Or maybe they're still tracking time, but they're not taking the time to calculate the effective hourly rate. So you might still be tracking time to see where you're spending time, but it's really hard, especially if you have a team. As an owner or a solo, you're probably doing everything. You can kind of intuitively see that increase in demand.
Okay, yeah.
But if you have a team, you're not touching everything. You're not intuitively seeing this increase in demand for that client. So if you're not seeing it, the only way you can get that visibility is by looking at this metric and seeing, okay, I have 5 people working with me now or at my firm. Did their workload increase? Like, you may not see it if you're not doing the work yourself. So that's another reason why you really want to continuously track it. You may not intuitively see that if you're not touching the books.
Okay.
So, and if you follow these steps, you're gonna be able to boost your firm's bottom line and just really build the bookkeeping business that you want to build. Again, the best firms that I've talked to, the fastest growing firms, the most profitable firms, they track this all the time. So this kind of comes into a new problem where I'm going to just briefly talk about financial sense. Calculating the effective hourly rate every single month for every client is pretty time consuming. You know, I know firms that calculate in spreadsheets, right? They pull the time, they put it in the spreadsheet, they take their billable amount, they calculate it, they analyze the data. Doing this every month for all your clients can be pretty time consuming. It can take hours of your time. And we know accountants and bookkeepers are very busy people. They don't have a lot of time already, and you don't want to spend your time running reports. A lot of firms know they need to calculate this, but don't do it because it's time consuming. So we decided when we built our product, we were going to try to automate this process. We wanted to make it easy, right? We wanted you to be able to every month instantly see how much you were making on an effectively hourly basis for each client automatically. Instead of taking hours, it would take seconds. And this is kind of what it looks like. So inside our system, you would be able to see all your clients. You could see how much time was spent on the client across the team, how much your recurring billings are. So those automatically populate every month, and it calculates your effective hourly rate. So we don't, Kate, you asked about this. We don't actually have like a trend, but you can go historically and look at each month and see what those rates have been over time. We have talked about creating an actual, like, you know, like maybe a cool graph that would show you over the last 12 months. But right now, but you could still go historically look and see every month how much you're making on an hourly basis. And this happens automatically in the background. You don't have to run reports. It makes it very easy.
So this is kind of silly, but I know a lot of people, like it's, and myself included, you say no one wants to have the conversation about raising the hourly rate. Like maybe like we might only have like one of those conversations in our gut like every 6 months or something. Like you can't like mentally get there. Like you're not this like killer guy who's going to be like, I get it, go get all the money. Well, this at least tells me, okay, I need to look at that $43 an hour client. Like, okay, I only can get the courage to do one. So now I know at least who to go try to renegotiate with. And then turns out you'll get better at renegotiation the more you try, but it at least allows you know who to start with, perhaps.
Yeah. You know, you can always start with, you know, the ones that are, you know, the least profitable, right?
Yeah.
You don't have to do them all at once. But it's a tough process. And what we've seen a lot of times is just, you know, it's a mindset. You know, a lot of people think worst case scenario, the client's gonna, you know, leave me, go somewhere else. But you'd be surprised. A lot of clients really understand they're a business, right? And they understand they got to operate, they need to be profitable. And they might understand if you can explain it to them, like, this isn't a profitable, I can't properly run my business with what I'm charging you. They might understand that more than you think.
Mm-hmm.
And that's kind of what we're going to talk about, right? So what are the benefits of this report? So like, one, you save hours of your time. You don't have to calculate this report every single month for every single client. It's automatically done in the background. We also give you the data, right? So like we talked about, you have the data to really renegotiate these rates. You can really give them the visibility of like how this is unprofitable for you. And not only that, you can see why. So with our time tracking, you have lots of reports. You can see down to the task level how long every little thing took. So you can drill down and see exactly why it's out of scope. Why have they become unprofitable? So when you're talking to the client, you can explain, you know, the reason this has happened is because XYZ in the bookkeeping process now takes twice as long because of this.
Yeah.
So you kind of get more visibility that makes you more comfortable, but also gives you the visibility of your client for them to understand what's going on. And you'll boost your firm's bottom line, right? It's important. You got to be profitable so you can reinvest back into your firm, not just to pay yourself, but to actually grow your bookkeeping firm or, you know, bring on the talent that you need.
Yes. I want to chime in. JM Wright is asking, can't that same tracking be done in Excel with the trend graph? And like, I'll answer, of course yes. This is if you're able to do that and you don't feel like it's using too much of your time. I mean, you'll be able to see the cost of Financial Sense soon enough. Like, go ahead and do it the cheap way. Go ahead and do it the free way. It can be done. What he's saying is this is, and I can tell as someone who has tried to track time and failed with free applications that it's, sometimes having that seamlessness really might be what you need to get the job done. But of course, there's always different ways to do this. Like, you don't have to buy an engagement letter sending software or whatever. You can kind of do it the old-fashioned way. So I don't discourage the inexpensive bootstrapping hacks, but at some point you're going to realize you're going to have too many clients where it's not, it's just like, man, I can pay a little bit of a monthly fee to get all this done and also get my practice managed. I mean, and it's more than just the graph. Like, this is just one tiny bit of Financial Sense that he's talking about, because I told him I didn't want the demo first. I wanted this education first, and we're going to get a demo. And y'all can decide
August
about
2nd.
the whole August 2nd, about the whole package. But this is just one tiny little slice of what it does, and with that timer built in. So that's how I'd answer that, JM.
That's a good point. You can get away with running it in Excel, but what we've found is a lot of firms do not only like that takes time, but it's also like the time tracking piece, right? It's a good point. Like, having it all in one place and making it very seamless so you can even get the data to calculate that is part of what we offer.
Especially if you have a team. I can see that getting hairy really fast. But where this would
track time.
Yeah.
So this is just a review from one of our clients. They were talking about how it was really helpful for them, and they were able to identify it faster. Like we talked about, the sooner you can identify the unprofitable client, the more success you have with actually renegotiating those rates. And it cut it down from 3 to 4 months to actually a few weeks, because they knew they needed to track it, but at the end of the day, they weren't doing it, because if it takes 30 minutes or it takes a few hours, accountants are busy. They don't want to have to sit down and create all this in a spreadsheet and pull all this data into one place. So it helps save him time and really help him boost his firm's bottom line. And just Financial Sense in general, like we talked about, this is just one small feature. It's a valuable feature that a lot of our firms love, but we do a lot more than that. We're really a full practice management tool. So at the core, what we do is we help you track your client work, right? We want to make sure nothing slips through the cracks and you don't miss your deadlines. So you can track your work. If you have a team, you can delegate that work and see their progress and make sure everything's on track. We have a lot of automation built in to save you time so you can become more profitable and get work done faster, like automating client data collection. I mean, a lot of people chase down their clients every month for the same information. We help you put that on autopilot so you don't have to do that, right? You get the data just shows up in the system and you can get the work done. And then just staying organized, right? So we have a client CRM where you can store all your client data in one place, contact information, passwords, and usernames to all their apps, documents, notes. I mean, anything you can think about for the client in one easy to find place, and it's all together, right? So really a full management tool built specifically for accountants and bookkeepers. And just to kind of hit that home, some of the value we provide. So we recently did a survey, and what we found was we saved the firms using our system about $9,000 a year per employee. So if you look at it by like the cost, looking at our pricing, which if you do annual, it comes out to, I think, about $250 a year. It pays for itself almost 30 times over. So it's the value you get from a system like this as a whole can really help your firm just save money.
Awesome.
Oh, go ahead. Is there a
question? I said awesome. Yeah, it's cool that your product has, just really benefited, and that y'all are helping firms grow, which that's what I try to do too.
I get excited about it. We spend a lot of time really listening to our customers, and that's like kind of like in our DNA, because before we even wrote the first line of code, we spent a year listening to firms before they were our customers.
Right.
And it's really helped us build an awesome product, and we're constantly improving it. I really believe in listening to the customer, because I'm not an accountant, right? Like, I've learned all this by working with them, and it's allowed, just by listening to the customers, allowed us to be successful and know how to solve their problems. So we're offering a special discount for everyone. The thing is, like, it can be hard for when a firm is starting out to really afford a solution like this. the budget's tight, you're just starting out, you may have just a few clients. So we're offering a 20% discount for the first 3 months to allow you to kind of have the chance to maybe try a tool out, see if it's a good fit for you. So you can do that with the promo code HUSTLE
Awesome.
when you log in and start your free trial.
Cool. Yeah. And there's a link down below, guys, that y'all will be able to click for everyone watching this. And thanks so much for doing that. I always try to ask for a discount whenever I bring someone on. So I appreciate you being willing to do that.
Yeah, no problem.
And that'll get people a chance to get set up, hustle through that first 3 months to then, then be able to pay full price, but it'll certainly help.
Okay, well, so that's everything. If there's any questions, we can dive in. If anyone has questions about the topic or FC, glad to answer any of them.
Yeah, let's see. Let's remove your screen and put us on there. Does anyone else have any questions before we wrap up?
Let's see if I can see them. Oh, I can.
A guy named Alfonso had asked if there was going to be a PDF of this PowerPoint. I don't even know how I would attach that into the YouTube description. I think, probably just keep rewatching what you are curious about, Alfonso, just for the admin headache.
Try to do that, and if you're okay with it, post it in the Facebook group. That
would be fine. There's the answer. Yes, you can share it as one of the files in there. All right, Trinity is asking, does Financial Sense help with email management too?
Great question. So not yet. That's actually one of the big features we're hoping to release in the next month or two. And basically how that's going to work is typically in an inbox, you have all these little subfolders with your client name, and you're organizing all your emails into those client folders. So what we're going to allow you to do is integrate with your email, and it'll pull all the conversations you or your team has with the client under the client's profile. So you have like a timeline of every conversation had with the client. You can see who talked to the client, when and about what. Then you can, leave comments or notes on it, on the emails that are important. You can tag it to work if it's related to some work you're doing.
Okay.
So it's easy to find, and you can turn an email into a project, which you can already do that in Financial Sense. You can turn ad hoc email request, forward it into our system, and it creates it into a project. So you're tracking it in the system on your dashboard, where you're tracking all your due dates instead of in your inbox, which is flooding with emails like every single day.
Yeah. Another question is Financial Sense only geared towards bookkeepers and accountants, or do you have like non-accounting firms use it just as another management system?
I think we might have one or two users. I think like a trucking company, maybe.
Okay.
It's geared for accountants and bookkeepers. If it works for you, like it could work for law firms or other businesses. If it works for you, yeah. But I mean, it's rare. We'd recommend you getting something really built for your niche, right? And that's kind of like for us, like some firms like using Asana or ClickUp or these kind of one-size-fits-all solutions, but we are specifically built for accountants and bookkeepers, and because of that, like it's more out the box, ready to go. You don't have to customize it. It's just super easy to use. It resonates. There's a lot of little features that just fit more seamlessly with your process if you use like a one-size-fits-all tool.
Well, and I think if people watch the full demo, I bet that will also help answer that question better. You can put your hat on of what your business is and kind of be like, okay, I can see how I could customize that. So that, again, August 2nd, full demo. Someone is asking, does it integrate with QBO's time tracking?
So yes. So if you track time in QBO, so like that one slide I showed you where I had the dashboard where it shows like time tracked, billables, and your effective hourly rate. So like we integrate with QuickBooks Online. One, if you do like hourly and you track time in our system, you can create invoices. But two, anytime you track in QBO with QBO time, if it's in QBO, we can pull that time into our system. So it'll still calculate your effective hourly rate. So if you do like QBO time, you can still use it and use it with our system.
Someone's asking if it integrates with Xero.
Not yet. So we have a big push for integrations in Q4 and Q1 of next year. So it's Xero, Practice Ignition is one we want to do, Liscio, Zapier, and a bunch of other really good ones. But we don't integrate with Xero just yet.
Which email do you plan to integrate with?
both Gmail and Outlook. Gmail's coming first, and then hopefully like a week or two after will be Outlook. Email's
All right.
easier to do.
I want to shout you out here. Nancy says, you guys will not be disappointed with Financial Sense. So there you go. And she says she uses it for a business that's not a different business that's also not bookkeeping. So there's an answer of someone who's using it. All right, guys, I'm looking at the time. I want to get our prize wheel gone. We keep those questions because we're bringing them back August 2nd at 1 p.m. Get your subscription to Financial Sense below. Use the discount code that he has given generously to our group. And now we're going to spin that prize wheel. Let me see if I can add this and take off that. And okay, we got the prize wheel here. Let me see if I can even zoom in a bit. Let's see. Fun. All right. Well, the name will come up quickly. Here we go. 6 months free of Financial Sense. 3, 2, 1. Tamiko Mays, and I think she was watching. I think she commented. Awesome. I love spinning that. All right.
There we go.
I will be in touch, Tamiko and Shahram. Thank you so much. How can people get in touch with you?
The best way is if you just go to our website, www.financial-sense.com. There's a little blue smiling icon in the bottom right-hand corner. Just chat in there. We get back to you pretty quickly. So if you have questions about us or just questions about this presentation, send us a message and we'll get back to you.
All right. He is in our Facebook group too, guys. So I'll out him there. You can find him in there. Thank you so much for being here. Don't forget to subscribe to this channel, guys. If you appreciate this, I have like more interviews than I probably should have scheduled in the next like 6 weeks. So there'll be a lot of good stuff coming out. Thanks again. I hope you'll have a great day, and we will see you in the Facebook group and everywhere else we hang out. Bye, everyone.
See ya.